The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we kicked off the week on Monday, we saw the soy complex very strong. Corn was up a little bit. Wheat, two-sided trade, and we'll call it two-sided trade in cattle and hogs as well. Got an important USDA report in front of us again here on Wednesday, the July World Agricultural Supply and Demand Estimates. I'm sure we'll touch on that. We're going to touch on what's going on in the markets as a whole. John Heinberg with Total Farm Marketing is our guest here today. John, hope you had a great weekend, and man, oh man, coming in here on Monday, that soy complex took off like a little bit of a small rocket to the upside here. Corn was kind of along for the ride, it felt like. As I alluded to, though, we got that report coming up on Wednesday, so I have to ask you, are we squaring up here a little bit ahead of this report? Is it some residual from that sharply lower acreage number we saw June 30th for the soy complex? I mean, what's your thoughts here as we saw a good day on Monday in the soy complex?
I think we had a combination of a couple things going into play. First off, technical side, held the low from Friday, got back over the 200-day moving average in November contract. That brought a little bit of money flow into the market today. You know, on top of that, too, we're starting to see some of the analyst estimates. A lot of questions of how the USDA is going to handle these reduced acres. What are they going to do with the yield? So now I'm looking at a carryout projection of just over 200 million bushels for new crop beans. That's pretty thin, in that regard, especially at this time with the, what we got for weather out there, crop conditions, things of that nature. I think that comes into play a little bit here too, as we're seeing some position squaring that, some of the people that moved to the short side of this market after we had this rally might sit back and take a little profit and step to the sidelines until Wednesday. There's a lot of moving pieces here. We're going to see what that report gives us. I think we're going to see choppy trade pretty much this week until we get to that report. And then we'll see what the numbers give us. Again, the acre number was kind of a bit of a market reset. Now we'll see what the yield does on this report for both corn and beans. Give us our second set of goalpost markers here for basically the rest of the summer, while we digest where this crop might be for both those two species.
John, it feels like the USDA is going to have to do quite a bit of massaging with these numbers on Wednesday. I can't think of another word to really explain it, because just with such wide misses by folks on that acreage and grain stocks report on June 30th, you mentioned now yield as well. We'll have to see what they do for the updates there. But man, oh man, I will be curious to see where some of these numbers kind of come into play here. I think that might have the trade a little bit anxious ahead of Wednesday.
No, I agree with you there. And massage is probably the right word to kind of get it all fit in the table here. And, one thing regarding that yield number, I'm kind of maybe in the camp that they won't do anything with it on this report. First off, it's still beans are made in August. We'll have, weather has improved, even though crop conditions still aren't that strong in some areas. But it's enough. Maybe the USDA just says, let's give it a month and figure it out. That'll give them some more wiggle room to work with the demand side of the equation and still keep a fairly comfortable number on the balance sheet if that is the case. So we'll have to see how that kind of plays out. There's still plenty of room on the demand side to make some adjustments, both old crop, probably a little bit on the new crop side, or the other way around, on the new crop side with a little bit of adjustments on the old crop side, that we can keep this thing in the low 200s. Which is still friendly for price overall. And, maybe again, the market's trying to find some equilibrium. Maybe you should be trading around this 13.5 window, and that's where we're going to hold until we have a better picture where this crop is, in the weeks and months ahead.
To your point there, kind of finding the equilibrium, that's something that I've brought up the last couple of days here on the show. It feels like in the case of corn and beans, the market is trying to determine a fair value for both here with all of this new data that's in the market, and you think about some overhead psychological resistance, $5 in D's corn, 14 in Nove beans. But it feels like these markets are trying to kind of shake things out and say, okay, this is what we think, ABC is a fair value for these commodities right now, John.
That seems very true, especially on the corn side, that $5 mark. And, again, with that added acre numbers really just puts a lot of extra bushels into the pile. So how does the USDA handle that? The worst thing is what they think is forecasted demand, versus what is the reality of the demand right now. That's a big concern. You're looking at, old crop sales and shipments, or old crop shipments, about 70, 80 million bushels behind the pace we need to get to that USDA target. So do we see some cut there? Do we increase feed demand a little bit here as well? And, just to kind of handle things in this regard, you look at the new crop side of it, sales are obviously big time lagging compared to where we could be, according to the USDA expectations. We haven't touched on what the expectations are there at all, but, we're looking at a yield cut 5 to 6 bushels per acres within the analysts' expectations. But realistically, there's enough room to move the demand side of the coin around because of those extra acres that we're still forecasting a corn carryover on Wednesday at 2.25 billion bushels, which is not friendly for price. And that demand side of the equation is going to be the biggest factor over all of this, and not so much the supply. It's going to be, can we get this product to move, and what's the market going to do to get that product to move?
And maybe a little bit of a glimmer of hope on Friday as we got some export sales on the books. We've seen a little bit come in here on the new crop side, but still things are fairly slow and just ugly, for lack of a better term, here when it comes to the demand picture for U.S. commodities, John.
Very much so. And it's just kind of a scary situation right now, at least in terms of where we are, in terms of our bushels. You're looking at the global competition that's out there for all three of the major crops, corn, beans, wheat, where prices are, where the U.S. is. The USDA put a lot of demand into the balance sheet off that June report, when we got the original, original numbers, actually in the May numbers. And that kind of comes down to the point where they're thinking corn prices, soybean prices are going to get lower, that we're going to see some product move. Now we're throwing into the equation extra acres on the corn front. So it really puts things into a bit of a washing machine here in terms of how we're going to sort this out. And I guess Thursday will be our first crack at it. The other thing that's got me a little concerned regarding Thursday too, again, things have improved. The USDA typically doesn't move a whole lot of the yield in July. So now, with that being said, obviously we got the conditions that they could easily make a move like that today. I wouldn't be shocked, though, if they kind of slow play this, and instead of taking 5 bushels the acre off, let's take off 2 or 3, get it down to 178, 179. Let's see how the July weather comes out. I've been talking to a lot of producers. I mean, obviously, we got areas of haves and have-nots all over the place. But the guys in the have category, they're talking to me how quickly things have recovered, how things are moving along nicely, that this crop might have a little bit more backbone to it than we thought, despite the difficult conditions through the early part of June.
And to your point there, USDA maybe slow playing those numbers. I'm with you on that as well. I very much think we could see that in light of, we still got July in front of us, as you said, pollination time frame in corn, and some of that chatter that this crop is looking a little bit better as we've gotten some rain. So a lot of things to consider there. And you mentioned as well the global demand, and I know you follow a lot of folks in South America as well, and obviously they have a huge crop. That's a Frida crop getting harvested, coming online, had a huge soybean crop. So that is playing a piece here as well into our whole demand pictures. A lot of that cheap Brazilian corn and bean crop is going to places like China.
And that's going to have a long tail into the fall on both of those two crops. And, the thing that I kind of keep trying to remind my producers about as we talk about things, and you hear the 2012 comparisons, and, crop conditions are difficult, and, the supplies aren't going to be there. In 2012, Brazil cranked out about 70 million tons of corn as a crop. Now we're looking at 150. I mean, it's or 130 plus. It's a double the size, and that those bushels are easily going to come in and replace anything that we could be losing here, and that just really makes it very, very difficult for us. Throw in some of the global economic situations. You saw some of the data out of China last night. Again, things seem to be struggling in terms of their overall economy. They may have the need to buy, but they may not have the capability, and they're going to stay with the cheaper product, which, given our relations, is not going to be from the United States at this time frame. So that's just going to be a wet blanket over top this market, I think, all the way through until we actually start seeing maybe some demand pick up. And it will eventually, we will see that business come. It may come from other sources. We all count on China way too much, but it is the mover. When we see those sales, we see that activity. The market loves that activity because we know the world's largest buyers in the marketplace. But right now, there is no interest. Everything I've been hearing and seeing, they've got a lot of activity. They're buying both Brazilian corn as well as Brazilian soybean sales for delivery into the August, September, October window. And that's the window we should start seeing things pick up here.
We are talking today with John Heinberg from Total Farm Marketing for our market analysis. John, let's go over to livestock trade, and I'll call it fairly two-sided trade in cattle and hogs. It was a quiet start to the week on Monday. What's your assessment? Do you just feel like it was kind of just a quiet two-sided day overall in both the cattle and hogs, John?
Well, on the cattle side, first off, we're just got to kind of balance out what we got in front of us here. We got a lot of mixed signals. And first off, can we get August back to new contract highs? We gave it a run today. We're a little bit short. Cash trade did kind of stay relatively steady, depending on what region you were looking at in terms of north or south. So with that, if northern trade, August was undervalued. So we saw some bid there. Then at the same time, I'm looking at retail values that continue to slide in this window. So we're at that point of the year where our retail high is probably in, end of July. We start seeing the carcass weights start to bottom out and maybe turn the corner and get a little bit heavier. So we're at a spot here. I think this market wants to make a move higher if it can. I think a lot of it's going to come off the direction of the corn price. If we see corn prices break and make that next 40, 50 cent drop down to the 460 area, 450 area, which I'm kind of targeting if we see it, that's going to fire up that feeder cattle market. That'll give us another push in the live cattle market just because of the, the tide of the cattle side of it. So we'd be shocked that we're fairly choppy in here overall. Wait for cash at the end of the week, waiting to see what the corn market does in terms of its price after Wednesday's report. And that'll give us either our next leg or signify that we got a double top in and we're at the peak for the summer here, or at least the early summer. Going over to hogs, again, a lot of different things happening there. Technically, we've kind of fallen apart. We rallied up through the 100 level for July and August. Now we're seeing some rollback. Now, the only thing there is the fundamentals are still fairly strong. Carcasses up 111 at midday today for pork carcasses. So we're seeing some good buying there. Cash prices staying in the corner. Unlike the cattle market, the hog market kind of looks like the market that the money wants to move into, and the funds are not short hogs anymore, but they're sure not very long. So there's some room to flow there. So it wouldn't shock me. We continue to see some money just kind of move slowly out of cattle into that hog market a little bit here. But obviously the fundamentals are at least supporting the move that we've seen in the hog market over recent weeks. This feels just like a fairly nice correction here off of those highs when we just kind of hit a psychological barrier.
Well, and we're going to get a good test of some of that cash here again this week on the cattle side, especially the feeder market specifically. I know Superior Livestock Auction, they got their Week in the Rockies sale this week. And if it's anything like their Core Belt Classic from this spring, John, we could see some fireworks there in the sale barn. So I know that's going to be a pretty solid test here as we go through this week on the cash side.
Yeah, very much so. And, the cash market's still strong. And even though I'm talking about retail values coming down, we're still 300 plus on the choice carcass.
Yeah.
So there's still some meat on the bone for the packer out there to continue to push these cash prices where they are. The supplies, obviously, in the north are just not there. Now we're starting to see some improved pasture conditions. So we'll have to kind of watch what's going on there. Are we going to see some of those heifers start coming out of the chain and go into the breeding herd? If that's the case too, that just only tightens up this cattle supply even more so, which could in turn make this thing even a more friendly market from the fundamental side. Watching the next cattle on feed report, let's see what those placements are. Let's see what the numbers are in the feedlot. Wouldn't shock me that we see things stay on the tighter side again, just because maybe some of that heifer movement and the heifer retaining is finally starting to kick in a little, given the moisture that we've seen in the Western Belt.
John, don't look now. Green on the screen in the dairy market on a Monday. What's going on there? That's something we haven't seen in quite a while.
Yeah, I don't want to jinx this, but again, here we go. We got a bottoming action on Friday. We finally got some decent movement in the cheese prices, and that's something we've been kind of talking about. We need to find some stability there. The heat across the plains in the last few weeks has started to cut into production. Plus, obviously, the lower prices has limited some of the production as well. Maybe we're getting to that turning point. I know I've said that before. I think tomorrow will still be the next key day. Let's get that third up day in a row coming off of a hook reversal on the bottom from Friday. Not saying milk prices are going to take off and go running here again, but hey, maybe we can get August back in the low 15s. Talking to a dairy producer or two today too. If we get 24 back in the 18 handle, probably an area we want to start thinking about things and getting things moving in terms of building some defense in. But at least we can get maybe some value back on the board here for producers after a pretty rough go and a milk market that's been on a pretty steady, slippery slope to the downside.
Well, John, great thoughts as always. Before we wrap it up today, floor is yours. Anything else you want to mention or reiterate for folks as they're kind of watching this market and waiting on Wednesday for that July WASDE report?
Again, just as we get ready for that report on Wednesday, don't be surprised by anything that comes at us. Again, there's just a lot of question marks right now, and the market's feeling that, and that's why we've kind of flattened out here over the last few days. I would always err on the side of caution. Okay, we are looking, especially in the corn market, at a bigger supply picture. I know there's a lot of things out there. Just make sure you're not marketing out just your back window versus what we see in the entire scale of things. These crops are tough now. The genetics are tough. I've seen some crops over the last handful of days looking very good in terms of we're picking up some moisture. I'm going to make a nice little drive. I'm heading down to Kentucky this week, so I get a good look at that Indiana, Illinois crop as we kind of head that way. I'll kind of get a good gauge of what it looks like, at least from the windshield on my travels on Thursday and Friday this week.
Well, we'll have to talk with you once you're back in the office and get a report on what you see on those travels. And I know if folks want to talk to you as well about the markets, they could do that very easily. What's the best way to get a hold of you, John?
Sure, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And that website of ours, totalfarmmarketing.com. Again, that information's out there. Webinar for after this report. So those things are there for producers. Take advantage of those things when you have them in front of you, especially in these volatile, busy times.
John, safe travels coming up here later this week and weekend, and we will talk to you in a couple of weeks when you're back in the office. Thanks for the time as always, and we will catch up with you soon.
Sounds great. We'll talk to you in a couple of weeks.
John Heinberg with Total Farm Marketing, our guest today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.